We have an exciting and fascinating panel discussion planned today with actually 3 guest speakers with me today. I think, unfortunately, Margin was not able to join us. I'd like to talk a little bit about the structure of the session. So all in all, we have an hour and 15 minutes for the session. And the way we're going to run it is we're going to focus on demystifying CBDCs. We're going to sort of level set and baseline the understanding of the vision for digital pound. And Nick is going to start with opening remarks. Then we're going to hear a perspective from commercial banks. So Rhiannon is going to cover that. And we have Catherine covering the broader market participants' perspective. We're going to probably dedicate 30 minutes for Q&A and make it very much interactive discussion so that you have a chance to ask questions. And with that, I'd like to introduce the panelists. Nick, would you like to go first?
Yeah, absolutely.
Just a quick intro.
Just a quick intro. So my name's Nick Butts. Over the last kind of 2 or 3 years, I've been the head of the Future of Money division at the Bank of England. Had 2 sets of responsibilities within that role. One was the strategy and economics work related to digital currencies, and particularly CBDC. But perhaps slightly unusually for some central banks, I was also responsible for physical currency, so both forward-looking policy to protect access to cash, and also all of our analytical and comms work as well. So that's me.
Thank you. Rhiannon.
Hello, good morning. My name is Rhiannon Butterfield, and as the slide behind me says, I work for UK Finance as a principal in our payments and innovation team. And actually, it's really relevant to be sat here next to Nick because we have quite a similar kind of history of our roles. At the moment, what I currently manage is on the one side of my desk, our work on wholesale cash, and on the other side of my desk, our work on new digital assets and money. And actually, over time, I found that to be a really neat intersection between old money and new money. I think there's a lot to learn between the two. And obviously, while one could draw a trajectory that says cash is going down and new digital assets and money are on the rise, I think that from the consumer perspective, we still clearly see that the latter is incredibly important to consumers and businesses. So actually, it's quite a nice way to kind of manage my work in that I can look at both sides of that changing economy.
Thank you. And Catherine.
Hi, good morning, everyone. Hopefully you can hear me.
Just turn it up a little bit.
Okay, excellent. Well, good morning, everyone. I'm unfortunately based out of California, so couldn't actually attend this event in person, but very nice to meet you all. I am from Visa. I'm the global head of CBDC and protocols. I sit on the product side, so we lead a team of product engineers really looking for infrastructure-related components in which that would be relevant for the future of money. So we spend a lot of time talking with central banks as well as regulators around the world on the topic of CBDC, stable coins, and all things to do with tokenization of deposit and assets. So yeah, very excited to be here and be able to talk with the panels.
Thank you so much for joining us. It's about 3 o'clock in the morning. Thank you, Catherine. That's dedication and passion. Thank you, thank you. A quick introduction about myself. My name is Alla Gancz. I'm a partner at EY and I lead our payments practice. And I think it's a very exciting time to be in payments. Payments is very much at the heart of digital economy with a volume of 240 trillion. And it's payments effectively is a strategic enabler of digital commerce. And I think we're entering an exciting phase of innovation, or the next wave of innovation, with new forms of digital money emerging. And I think it's really important to go into this phase with a clear understanding of considerations, the driving forces, the guiding principles, and work together as public and private sectors in shaping that new ecosystem, because ultimately in the future, it's all about providing value to consumers, to merchants, to corporates. As part of this session, we'd like to refer to three documents that you may be very familiar with. Number one is the consultation, Bank of England consultation on CBDC. And we're going to try to unpack it, and we're going to try to kind of explain all the, not just what's in the paper, but what's the thought process behind it. Thank you, Nick. The second document I'd like to refer to is the 2 recent speeches by Andrew Bailey and John Cunliffe that refer to the lessons from the past, and the shape of things to come. And I think the recent speeches took place over the last 2 weeks or in the month of April. And that just shows you the speed of change and the pace of change and how everybody and so many stakeholders are looking and thinking about it. So I really hope you enjoy the session because we really thought through that. And what we're going to start off with is really with the CBDC consultation paper. We'd like to go and sort of think about it. We're 2 months into the consultation. The responses are due on the 5th of June, on the 7th of June. And essentially the way we use money is changing. At this stage, Bank of England think that it's likely that digital pound will be needed in the future. It's too early to decide whether to introduce the digital pound, but it's clear that Bank of England is doing the preparing for that. It will be a new form of sterling, similar to a digital banknote issued by the Bank of England, and it would be used by households and businesses for their everyday payment needs. It would be used in store, online, and to make payments to family and friends. If introduced, it would exist alongside and be easily exchangeable with cash and bank deposits. We wanted to make the session academic but also practical and see how digital pound will interoperate and coexist with other types of digital currencies that are emerging, including tokenized deposits, stable coins, cryptocurrencies, if regulated. So we'll touch upon all those aspects. And I think it's important to have that holistic perspective around that new and emerging ecosystem. And with that, I'm going to ask Nick to start with the opening remarks and set the scene on CBDC. Thank you, Nick.
Thank you very much. Excellent. Okay. Thank you very much and welcome everyone. I've got some slides which hopefully can appear up on the screen magically at some point, but we'll see. They're not too essential. So, good afternoon all. It's a pleasure to be here today, and I think really exciting kind of discussion that we've got ahead of us. I've already introduced myself, but one point that I wanted to make, I suppose, just in terms of my background, which is relevant. So, I'm an economist by background. I've worked within the monetary analysis area of the bank for some time. But I've also worked running the kind of front office operations in dealing room at the Bank of England, so doing our monetary policy and financial stability operations. And the reason why I think that's important is that in this discussion, bringing together some of the more kind of academic or theoretical considerations around CBDC, but also the practical application of it and the kind of design choices that need to be made is really important, and hopefully will make sometimes what can seem a little bit baffling seem a bit more kind of concrete and real, and I hope we can get into that in the Q&A session as well. So in recent years, I think the prominence of digital currencies within perhaps not broad public discourse, but discourse within certain more expert circles has certainly changed quite a lot. A number of years ago, I remember when I used to go along to things like the money market conferences, for example, which is quite an academic conference in the UK, you'd sometimes have slightly wonkish kind of conversations about CBDC, at the corners of a monetarist academic paper kind of discussion of monetary policy. And that's really changed. We're in a room today with people who are, central bankers, people who are policy makers, people who are financial market participants, academics, but also lawyers and practitioners as well. So that's been a really big change. And it's been a big change for central banks as well. So we saw some of the figures earlier in terms of the number of central banks that are engaged in work in this area. But it's around 90% of surveyed central banks have some form of work happening in this space. So I want to talk a little bit at the beginning about why this has happened, and the why leads into why we think that a central bank digital currency may be likely in the future, and I put a heavy emphasis there around likely. So that's going to be the focus, and hopefully we can get into some of the detail during Q&A. But first of all, I wanted to start with some fairly basic sort of definitional stuff, because this, and we've already seen it within the discussions, can be something that there are a lot of questions about and maybe can cause a little bit of confusion. So point one, from my perspective, is that our work, and most of what I'm going to talk about today, centres on retail CBDC. And what I mean by retail CBDC is a money that is used by households for their everyday payments. So it might be between each other, but it could also be with corporates, so going and doing their shopping or managing their day-to-day affairs. So that's the first point. The second point is, well, the clue's in the name. This is a central bank digital currency, so emphatically it's got the central bank in the heart of it, and the claim is directly on the central bank. That's very much like a banknote. I'll come back to that point later on within the presentation. But my point three is that unlike a banknote, this would be digital. I mean, in some ways, I'm just unpacking what CBDC is here. And that's important because it should have a greater relevance to our day-to-day lives and how the economy is changing. So now, hopefully, we've got this clear. We can move on to the question of why are we all looking at this. Sorry, Alla, I've realised I've got someone's phone there, so I'll just put that down there. So we can hopefully move on to the next slide, which I'm going to lead up to. And I think there are two key trends that are relevant to why there's so much focus on digital currencies at the moment, both within the public sector and also within the private sector. The first of those is that cash usage is declining. This will be familiar to all of you from your day-to-day experience, but let's put some numbers around it. 10 years ago, 50%, over 50% of the volume of payments within the UK were made in physical cash. Now, that may be hard to believe now, and in some ways that's borne out by the latest data, which are 15% of the volume of payments now are in cash. And that may well fall further. We can look at countries like Norway and Sweden, where that's closer to 5%. Now, I want to be really clear here, and this is actually part of the responsibilities I've had over the past few years. The UK authorities are emphatically committed to preserving access to cash for those who want to use it to make payments. And there's legislation going through Parliament at the moment. It's in quite an advanced stage in the Financial Services and Markets Bill. And that's going to protect access to cash, but it's also going to make sure that the wholesale distribution system that underpins it remains fit for purpose and is well regulated. Nevertheless, it's just a clear consequence of the way that our lives are evolving that cash is less relevant, perhaps, to some in their day-to-day lives. There are a couple of really obvious examples of that. One is that it's pretty cumbersome to do online shopping using cash. You can technically do it. You can go to your local Tesco or Sainsbury's and buy a voucher and use that to make a transaction online. But none of us really do that in practice. So that's been a big driver of change. The other is obviously the changes in technology that we have available for us. And there's very significant market penetration there. So around 90% of people in the UK now use contactless payment to make everyday payments. So that's a really significant change and accelerated during the COVID pandemic. The second key development is that new forms of digital money have been emerging for some time. And those have taken, this is both digital money actually I should say, and also digital payment have been emerging for some time. And these include things like e-money, digital wallets. There's obviously stable coins are being talked about a lot, and tokenized deposits, both in the retail and the wholesale setting. And I think those are perhaps best viewed collectively as a response to the increasing digitalization of our economy rather than individual developments. So they all have a kind of common root cause in terms of our modern economy that sits behind them. Now, at the bank, and I think this is true for many other central banks, but certainly at the bank, who I can speak for, I can't speak for others, these things really matter and they inform our assessment of the likely need for a CBDC, or what I'll call, probably much to the Digital Pound Foundation's joy, the digital pound, which is what we've decided to call it. So inform what we think of as the likely need for it. So the first of these is the need to be able to value the robustness of all monies within the UK. And we have a very nice explanation of this earlier, so I'll give it another run as well. But Physical cash traditionally has played that anchoring role, so you could convert into banknotes or coins at any point in time if you wanted to, and that could give you confidence in using other forms of money that had easy convertibility into them. But we've seen, first of all, that we've got changes in cash use, which make that more difficult to do, but also the emergence of new forms of money where that convertibility into cash might not be as straightforward. And so we need to think about how the right to convert private money into public money effectively needs to evolve to be able to support the financial system. So this effectively is the argument in the blue box. The second is that we talked about innovation happening. There's different forms of money, different forms of payment. Innovation normally brings around many benefits to consumers and firms, but it does also present some risks. And when we're thinking about the kinds of money and payment changes in digitalisation, there's a lot of data involved in that, and the combination of those things can give rise to quite powerful network effects. And this can lead to fairly classic economic problems of market concentration, potentially walled gardens, or a reduction in interoperability, so the ability to be able to move with low friction and low cost between different forms of money. And we're arguing that publicly provided digital currency can help play an important role in guarding against those risks, but also promoting innovation. So I think it's worth going on to the next slide just to make that a bit more concrete in terms of how we would envisage doing this. And I notice Swift seem to be supporting all of our slides today. I'm not quite sure what's happening there, but these are Bank of England's materials rather than
Nick
Swift.
is very happy. Thank you.
Getting free publicity, but these are my materials, different Nick. So this slide summarises a key aspect of the design architecture that we're setting out, and this is really central to the approach. Public-private partnership, and we call this the platform model. Now, within this, the central bank is providing a core ledger, so this is at the top, and the idea there is that this is, robust, resilient, fast, and efficient ledger that the store of value is going to be held on. So if you're a user of this, you always have a claim directly on the Bank of England, and you can trust that claim. The idea then, though, is that the user-facing elements of this, the customer experience, you'll be glad to hear, is not going to be handled by the central bank. I think that would be, for many people, some idea of hell. But instead will be provided by the private sector. So they would offer, we call these PIPs, but effectively you can think of them as digital wallets, and you're going to be able to store your CBDC within a digital wallet. There are many advantages potentially of that. So the onboarding experience, for example, would be handled by the private sector. Things like AML and CFT checks could be done by them as well, and this could support innovation in the technologies that are used to do those. But also customer enhancing technologies and approaches could also be offered at this layer as well. And we have a bit of terminology of e-SIPs, I won't get into too much, but they're they could add potentially kind of ancillary type services around this. And there might be, for some of you who are familiar with open banking, you might have seen examples of those kind of third-party services that are being offered. And this is obviously facilitated by an API layer. For those of you who are technologists who understand that far better than me, for those who aren't, it's just the connection effectively between the private sector wallets and the core ledger. And the idea here really is that this plays to the comparative advantages of the public and private sector. That's important because it means that the PIPs and the e-SIPs can help focus on providing diverse and innovative solutions, but they're not providing a custodial service. The claim is always on the Bank of England. They don't have to run really big and expensive infrastructure to be able to do this, and that helps lower barriers to entry, and it helps promote innovation and competition. So I'm just going to bring up now a next slide, and I'm going to conclude at this point because I wanted to keep these remarks relatively short. Don't worry, I'm not going to talk through all of these, but I talked about making this practical in terms of what CBDC means, and this slide summarises at a relatively high level a range of other design choices that we've set out within the consultation paper that we published a couple of months ago. And these range from things like the public-private partnership model to the fact that we suggest that we wouldn't pay interest, how we plan to handle some of those risks around disintermediation and financial stability by using limits, for example, but also the level of access. So we see this as a domestic form of money and payments, but we do also think there should be non-resident access to it as well. So those are a few of the points that I'd pick out, but hopefully you can see it okay, this can be a useful source of kind of inspiration for the discussion that we're going to have, might give you some ideas about questions that we could pick up in the panel. And I think that's a good opportunity at that point to conclude and go into that panel.
Thank you.
Thanks very much, everyone.
Thank you. Thank you, Nick. I think with that, I'd like to ask Catherine perhaps to provide some opening remarks and thoughts or reflections. If you like, Catherine.
Sounds good. I think there's a lot that I echo with what Nick is saying, and specifically maybe starting from the public and private partnership. I think that's really important. And I guess just to unpack how we are sort of thinking about it and what we're sharing with central banks as we're looking at CBDC, I think it's really important, right, to have this mentality about being very user-centric and really trying to think about what that experience as well as the infrastructure, the type of services you might need for the user. So coming from that perspective, there are about, I think, 3 key principles at least from, as we're looking at CBDC from a product angle, this is how we're thinking about it. Number 1, I would say, is about the commercial bank readiness. Number 2 is on developer friendly ecosystem. And the third is on merchant acceptance. So I'm just going to kind of go through each of these briefly. I think when it comes to commercial bank readiness, and I think this is well known in every single country, almost likely you're going to have a 2-tier system design. To some level or extent, you're going to, as a central bank, they'll be working closely with the financial intermediaries trying to distribute that amount of money. And I think specific in the Bank of England case, there's a very well-defined structure of how the public and private partnership will evolve. So as we're thinking about the readiness coming from the commercial bank perspective, if a digital pound is happening in 3-4 years down the road, I don't know, I'm just giving a random number here, but the point is commercial banks need to be ready to be able to distribute that money. And there's a lot to think from in terms of the services they will have to provide, i.e. things like KYC, AMLs and such. How's that going to be critically integrated into that existing banking application or banking system overall? And how they might even, things like wallet infrastructure, what that might look like, etc. So things like that, I think when it comes to detailed design choices, it matters a lot. And hence, I think there's a decent, I guess, number of years of runway for the banks to prepare. But the crucial thing is it has to work very closely with the public sector to really make sure that the design choice is chosen appropriately. So that's number 1. I think number 2, when it comes to developer-friendly ecosystem, it sort of echoes a lot into what Nick was saying about this platform model, but also kind of looking closely on the recent development around stablecoins. I think there's a huge lesson to be learned in the sense that money can be programmable. It's not only just a medium of exchange. In the future, with the technology itself, you can really build things on top of the money. So money becomes a platform. And hence, I think there's a lot of exciting opportunities down the road to which different business ideas and stuff can be just happening organically on top of this new kind of programmable platform. But to enable that to happen, we have to ensure a system that is both compliant but also very friendly for the selected type of developers and companies to be able to build on top of that. Things like, how can I create a great user experience that can leverage these digital money in the future, as well as things like some really relevant things around how could you create, say, an offline experience for that digital version of cash. There's tons of, I think, new innovations can be built if we can ensure that this platform is accessible for others, for builders to be able to build on top of that. And the last but not the least is around this very basic but important principle around merchant acceptance. And I think this is where you can draw a lot of lessons from other countries as well, in which we have seen introduction of retail CBDCs across places like in the Caribbean, in Nigeria as well. I think there's a pain point in the system, essentially, when it comes to adoption. If the merchants are not ready and the point of acceptance is not designed appropriately to accommodate this new form factor of money, you're going to see a lot of friction in the economy for people to spend as well as to store these money with respect to how they deal with these kind of digital new CBDCs. So to that effect, it's very important before the release of a CBDC to ensure that the merchant acceptance is ready to go. And I think to that point, maybe just to even begin with, we emphasize a lot on this notion of backward compatibility, in the sense when CBDC will first get introduced, we should hopefully anticipate all of the existing payment rails and system will be able to support that, because over time, that this is when we think merchant will, invest significant amount of money to be able to upgrade that infrastructure accordingly.
Thank you very much, Catherine, and thank you for bringing a very practical, pragmatic perspective around it. That was really useful. Okay, and Rhiannon, would you like to share maybe your thoughts and reflections sort of around digital pound, but through the lens of commercial banks? We know that bank deposits represent 85-90% of money in circulation, which is a large chunk of money, and how would that coexist with digital pound?
Yes, thank you. I think it's fair to say, well, first of all, I have to caveat all my comments as UK Finance. We represent a huge array of firms across the full ecosystem as the Trade Association for Financial Services. And so I think inevitably, what I see is a really diverse set of opinions forming. And, we've been really heartened that the bank is definitely taking the approach that this is a marathon, not a sprint. They want to bring the industry on the journey with them. And to make sure that all these really deep and kind of important design choices, implicit and explicit kind of driving forces for why a CBDC, a digital pound, would be the right choice for the UK. They want that explored properly in the right contexts, and indeed not only across industry but civil society as well, which I think is important, and I know we'll come on to later. So as I said, I think the membership that we represent has very diverse views on this, and I think that will continue to evolve and mature. The industry, I think, is really appreciative of an opportunity like a big consultation like this to really kind of draw a line and say, okay, what do we think about things at this point in time? And I think that's why we've said we're really pleased that this is being approached as a kind of public-private partnership, an opportunity for financial services industry of all kind of colours and tribes, because I think there's, FS doesn't just mean a single thing anymore, but that we do have the opportunity to kind of, co-create, think really imaginatively with the central bank and regulators and government on these issues. And I think industry is really excited about some of the opportunities too. I mean, clearly, a lot of our responses to the consultation will be going into the detail about, okay, well, this question hasn't been answered. How might we think about this? What are some alternatives to this approach? And that's the right thing to do. That's the purpose of the consultation. But there's also a lot of excitement, a lot of sense of, coming on a journey, wanting to think about the best ways of delivering some of these things. And also we heard in the earlier sessions today that, this isn't new. A lot of this has been around for some time. And so actually it's about thinking what's going to come next. And if we're going to think about a digital pound that would come in by 2030, what's going to be happening in 2030, and how would we design a digital pound now that would be suitable and efficient and helpful for a kind of 2030 UK. So I think looking at the consultation process, and we're kind of in the middle of that now, so no final positions on anything, but I'd say actually I can't say there's a small number, there's a very long list of things that we'll be talking about, and I think that's all going to be really helpful. But if I just picked out kind of 3 of the headline kind of issues that we've been talking a lot about in all of the industry groups, of which there's a lot. I mean, I'd say the first has already been touched on by some of the great panellists we had earlier as well, which is the impacts on the health of the economy and the ability of banks to continue to lend and create credit. Probably understandably, that will be a core kind of area of focus for us in industry as we seek to kind of unpick what are some of the unintended consequences of introducing CBDC and how that might impact on kind of the health of the UK's economy, GDP, lending to businesses and consumers. We did a paper last year that analysed kind of impacts on credit creation from the introduction of a CBDC, and that kind of estimated potentially that if you had the associated deposit flight with CBDC, you might kind of lose up to 20% of credit creation opportunities in the UK. So we're going to continue to expand on that as an industry to see kind of what are the opportunities for minimising some of those risks, and also what might come. We've seen in the past, and certainly in payments, you'll all be familiar that sometimes when a gap emerges, things come in to fill that gap, which actually for UK consumers and businesses and regulators, those things are less desirable. So actually, how can we ensure that there is no ensuing gap, and that this kind of natural evolution, which all financial services participants recognise is an ongoing state. We always hear this point that we're not perfect. There's no standing still point to this natural evolution. I'd say the second kind of big issue that we're exploring quite strongly is around the prioritisation of strategic initiatives. So what else are we doing in the UK at the moment around payments? Again,
not much.
Yeah,
Only NPA.
Yeah, small little other projects that the industry is currently also investing heavily in. So I guess that needs to be really thought about. We heard another panellist earlier say, kind of the risk of actually slowing down investment in some of those areas if firms feel that that a decision is going to be kind of delayed, or that a central bank digital currency might kind of lead to a diversion of resource. But also really thinking holistically, joining the dots, using some of these well-worn phrases, but actually how do you take things like RTGS, MPA, sorry, I'm assuming all of these things are well known to people, that the new payments architecture, our retail payments architecture, even account-to-account payments, which obviously we've been discussing a lot more in industry the last couple of years. All of these are very kind of timely and important discussions to have all at the same time. So we're trying to link that together and really make sure that, again, we think forward and think, what does the UK need? Do we need 3 or 4 competing retail payment infrastructures? ? And then the third area, as I said, there is a long list, but I think the other area we're really interested in is alternative ways of delivering some of the opportunities of a central bank digital currency. So the consultation paper rightly points out that there's lots of different ways you could approach this question. And actually, we've been hearing a lot in those speeches you referenced about tokenised bank deposits. And I think in both of those speeches, they've reiterated the ongoing importance of kind of the 2-tier monetary system. And actually thinking about whether, we heard about RLN earlier as well, this kind of unified ledger approach where you might not just have access to digital central bank money, but also access to digital commercial bank money alongside that, and the kind of efficiencies that might achieve. And that slide we had earlier as well about the kind of natural progression in all things that go from interlinking different ledgers to eventually a single ledger. So I think that probably also gives us maybe this outline view that perhaps in the future that's where we're heading anyway. So three really big topics, top of a long list, but it's such a fascinating thing to be exploring alongside the bank. Very interesting.
Oh, that was absolutely perfect. And you have a big task ahead of you. You'll be very busy. On the 7th of June, I think we'll have a party after you consolidate and have a balanced view in response to consultation paper. Well, with that, I think I'd like to tackle the point around inside-outside money. Why don't we try to demystify that with Nick's help, perhaps? So Andrew Bailey, in his speech, the Governor of Bank of England, in his speech about monetary and financial stability, introduces the notion of inside money and outside money, emphasizing the role of digital commercial bank money. And he's, just to quote, commercial bank money is inside money and the central bank money is outside money. We regulate banks in good part because money is a public good. Inside or commercial bank money is now the dominant type of money, and that supports the provision of credit in economies. Would you like to comment and just talk a little bit about it?
Yeah, I think that's right. One, inside money and outside money tends to cause kind of endless confusion because it's almost the exact opposite way around to what most people would expect, I think. But both forms of money have been a feature of our economy for a very significant period of time. And one of the things that's quite interesting actually is if we think about the form of central bank money that's been available to most people for longest, that's of course banknotes. From a Bank of England perspective, we were set up in 1694. Relatively early in the 18th century, we started issuing banknotes in a kind of standard form. So originally they were for very specific amounts used to settle very specific debts, and then they moved into a form of standard units effectively, so they could be used more easily to facilitate trade. And one of the things that's interesting in that context, I suppose, is that use until relatively recently has endured actually for a very long period of time. So we're going back to the beginning of the 18th century, obviously coin before then. And for part of that period, you've operated in a model which in a way is a bit like a platform model actually. So we print banknotes, but we don't distribute them around the country. We use a set of 4 commercial operators who are subject to some scheme rules. We sell those in sort of almost wholesale transactions in large blocks of notes. And then they have arrangements with the endpoint. So retailers may need floats of money that they get, or it may be ATMs that get stocked. And what's interesting is that variations in that framework have existed for a long period of time, and yet they facilitated a very large range of use cases. So, it's been possible in the last few years to go and buy an iPhone with cash, for example, and I don't think anyone back in sort of 1720, when these changes started to occur, would have possibly foreseen that would have been the case. There are challenges now, and I think we're reaching that sort of technological frontier, at least for retail central bank money, where it needs to really evolve if it's to be relevant to people's day-to-day lives. And we're also, and we might touch on this later, I think, but we're also thinking about how the evolution of our other form of central bank money, which is central bank reserves, which are obviously really important for wholesale market participants, particularly banks, need to be able to evolve as well to be able to support better both new technologies within wholesale financial markets, and that includes the application of DLT to wholesale markets, but also how those can evolve to better support cross-border financial transactions as well. So this isn't it's both not a one-horse race from a public-private perspective, but it's not a one-horse race from a retail wholesale perspective either.
We'd love to talk about the wholesale use case, because the current consultation paper is really focused on retail, but it feels like we're trying to future-proof the existing current sort of traditional forms of money and prepare for that future. And I think UK as a market has always been at the forefront of innovation, and I think perhaps this is part of that sort of staying ahead of other markets. A couple of questions I wanted to tackle, and then we're going to open up for Q&A. The privacy, offline payments, and then retail versus wholesale. So shall we talk a little bit about privacy? Are there any concerns from a privacy point of view of the digital pound? Are there or not? Are we trying to think, how do we... Nick or Catherine or Nick, would you like to?
I'm happy to start. I'd be really interested in other people's perspectives on this. I mean, yes, I think privacy is absolutely critical. So, we talked earlier about the role in sort of anchoring the system and how public money can do that. But that fundamentally is built on trust. Financial system depends on trust, and we've got a lot of different sort of examples of why that trust is important. So the Information Commissioner's Office did some research a couple of years ago that showed that within sort of financial services, this was an absolutely first order issue for the general public. So it really matters for adoption. We talked quite a bit about our consultation paper, but I was also involved in 2 previous discussion papers, one of which was way back in, well, not that far back, but in 2020, feels like there's been a lot of water under the bridge. And we got a very large number of responses on that about privacy and how important it was and how it could shape adoption and the need to take it seriously. So I think from our perspective, both from Bank of England and broader HM government, that message is kind of loud and clear and well understood. I think there's a few ways that you can respond to it, just very briefly. So the first one is sort of legal framework, if you like, and that's that any future digital currency would have the same level of protection that commercial bank money has at the moment, so same level of data protection and privacy protection that's already the case. The second one actually goes back to the platform model, which is privacy by design effectively. So within this, we've got a core ledger and we've got third parties offering the wallets. The privacy design of it actually goes a stage further than that, and that is on the ledger we do not need to, and we do not want to, and we do not propose to store any user identifying information on the ledger. So that will only be handled by the third party. So they will do the KYC work, they will do the AML, they will do the CFT, and the Bank of England, as the operator of the ledger, would not even see that information. So there's a sort of privacy by design element of this that I think is quite important. The third then is that I think if you've got this framework where you have lots of different wallet providers or PIPs providing those user-facing services, then choice over privacy becomes a clearer issue than perhaps it is today. So it may be that some people are really bothered about privacy and that they migrate to a particular wallet that's offering CBDC with very strong kind of protections around that. It may be that other people, they're not terribly bothered about their privacy. They might want to enjoy some discounts at stores that they use, and they could choose a wallet that offered that. But the point is the choice would be more explicit, and so that may mean that the benefit that they get for providing some of their data is clearer. So I think those are some of the key features that we've been thinking about as we've been working.
It's very, very helpful, and I think it's very intentional to sort of be aware of privacy considerations, and it's not just replicating other CBDC model that exist elsewhere.
There's one final point I'll make, that I think sometimes privacy and anonymity get used a little bit interchangeably, and that is important. I don't think you can have a new form of digital money that is, you know, very low friction, very low cost, very efficient in terms of the transfers that it's facilitating, and make that anonymous, because I talked about the know your client, AML, CFT. You can't do those with an anonymous token or anonymous payment system. So I think that's outside of scope, but very high levels of privacy, I think, are something that is central to the design.
Thank you. The next area we wanted to talk about is offline payments and the role of digital pound, and how would digital pound enable offline payments. Catherine, would you like to tackle that?
Sounds good. I think this is a really important area. It goes back to this objective, I guess, around having a digital version of cash. And of course, I think there's a lot of benefits with regard to why this could be say alternative form of payments, say when the online system is not working properly, you want to have a backup system, or things coming from a financial inclusion perspective that you want to have access for those who might not have a bank account but can still access cash today, so then they should be able to access that through some ways in the future. So I can share a bit about offline, how we're thinking about it from a technology perspective. So I guess back in 2020, we released this paper around the offline payment system, actually very much in line with thinking about a two-tier CBDC design, in which we were looking at inspiration from this notion of public key infrastructures and what that means when it, being implemented into a monetary system. And this is where you're really looking at central banks sitting at the very core of that whole construct, in which they're sort of the ultimate authority who can set the governance and set the supplies and etc. But then they can delegate a lot of these tasks down to the trusted entities who can then carry out a lot of these day-to-day operations for them. Underneath this sort of two-tier design, we then envision, having wallet providers down on this payment tier. So you have the infrastructure tier in which the central bank plays the prominent role, and then you have the sort of the more payment tier in which it is the financial intermediaries who are interacting directly with the users. How can they enable things like offline? And this is really leveraging sort of some of the latest technologies, i.e. if you're looking at how to leverage your secure execution environment inside a mobile phone, and this is normally, I guess, available for any mobile phone that was produced since 2016, they have these sort of hardware element already embedded into that. What kind of logic can you embed directly into these phones such that in the future, these hardware devices can physically, in a way, lock these digital money inside these devices and be used for payments if you're kind of in certain situations that would require offline payments. And this system design is really trying to think about things like, it's really important, for example, to avoid double spending, right? So then a money cannot exist at the same time when it's both online and offline. So there has to be a very secure mechanism to ensure that when you're withdrawing these money as digital version of cash into your phone, that money is no longer available on your online account. And once, as a user, you have these money, I'd like to see them as being downloaded onto your phone, then the question is, to whom can you spend this money? Imagine you're going to a merchant store that the merchant doesn't have this sort of upgraded device. Can the merchant at least accept this form of offline money? The answer is yes. Versus another more novel situation, you're paying to a friend, i.e. a P2P payment, in which your friend also has a mobile phone, has this sort of secure hardware and being authenticated and authorized. They can then accept this offline money and be able to spend it continuously in an offline fashion onward for a secondary transaction. All these things, actually, we have tested it. It's very much research, I think, but I think there's a lot of kind of new ways you can enable money and the spending experience to be had. Having said all of that, though, I think one thing important to highlight is that there are still a lot of risks entailed with offline payments. I think it's important to note that I think the entire payments ecosystem will always kind of move towards a more digital version of things, right? Because there's much better experience protections and stuff in place. So as we're looking at offline payment systems, there's a lot of potential trade-offs to be had, and hence it's really important as any central bank or as any company wanting to implement this. One thing is to ensure that security aspect is protected, and also I think that comes to the potential commercial viability aspect of how a private entity may implement this in a successful way at scale and be able to provide a range of services, including things like, if you lose your mobile phone device or other sort of hardware device that physically kind of have these money, would it be able to recover some of that, right? Could you also conduct traceability while ensuring things like privacy as well? So I think there's still a range of extra services and things to be considered, but this is where I would say a huge amount of innovation continues to take place.
Thank you, that was great.
Could I just add in just one comment there? I mean, I think actually Catherine touched on it, but I think, my fraud and police unit teams would be cross with me if I didn't mention that clearly that's one of the areas that industry is really interested in looking at, is kind of, the fraud risks for consumers around offline payments. And I think clearly we know scammers and criminals are always going to target kind of, those weaker spots in the system, and that may well be one of them. But the kind of interesting tension with that is that offline payments is also one of those exciting things that makes possibly makes CBDC more like a cash proxy, because you've got that ability to use it up a mountain with no battery or no internet signal potentially, and you've also got that opportunity for digital and financial inclusion. So for those individuals who feel much less confident using kind of apps on phones, there might be smart card technology, other forms of technology, that can actually enable consumers to utilise a CBDC in a more cash-like way, which I think actually is a really interesting kind of angle that we want to explore as part of the consultation. Wonderful.
Lots to think about. I would have one more question, and then maybe we have a Q&A, if that's okay. Let's talk a little bit about tokenized commercial bank money. So in his speech, John Cunliffe says that some banks in the UK and other jurisdictions have been exploring investing in development of tokenized deposits as settlement assets on new forms of ledger. And the majority of this effort appears to have centered on wholesale as opposed to retail. And in regulatory terms, the tokenization of bank deposits is a much simpler proposition than non-bank stable coins at this stage. What are your thoughts about the opportunities for commercial banks and the role they can play? Rhiannon, would you like to?
Yeah, I mean, I touched on it a bit in my opening comments. I mean, that's definitely one of the avenues that industry is, really interested in exploring at the minute. I think, we're very much kind of enthused to hear that, there is a continued acceptance of, the 85 to 95% of the kind of existing money that's out there, and what we can do to continue to innovate off the back of that. I think that's really positive. It also might be, as I said earlier, kind of, that the future of CBDC is more along the lines of a unified but partitioned ledger that allows access to digital central bank money and digital commercial bank money. I mean, I think, we also want to just be kind of realistic. We can't boil the ocean, and I think there is so much to unpick with a design of, a CBDC, but to the minds of many in the industry, I think there is a lot of opportunity to explore around tokenized bank deposits for some of the reasons that were mentioned in the speech, in terms of, you can kind of fast track to some of, to a more advanced place of discussion, because you've already got that regulatory, kind of wrap around, and kind of, the security that all of those provisions are already made. So I'd say that it's a really, interesting time for development and thinking on those points. And there does seem to have been a bit of a kind of coming together of thinking on the central bank part. If we look at the BIS speech, the Bank of England speeches, that actually, it's really making sure that, we're not saying, that we want a digital pound to be the only game in town. There needs to be lots of other private sector innovation, and that's hugely positive for the banks.
Thank you. Nick, anything to add?
Yeah, I'll just come in briefly on that, because I think that last point is critical, and I suspect not for this audience, which is fairly kind of expert, but sometimes gets misunderstood. I mean, the idea of the CBDC is not to be sort of monolithic. I mean, it's to be one form of many forms of money that are available within the economy. So, you could have a world in which the central bank is providing CBDC and still providing cash, and it may be that cash is being used by a relatively smaller share of the population, but you could definitely envisage that alongside commercial bank deposits, which may evolve in a variety of different ways. And then obviously there are stable coins as well, which are part of the picture, and the UK authorities are doing a lot of work there, both in terms of there's clear expectations that have been set out by the FPC. So in very simple terms, they're saying if it's a form of money, it needs to be regulated to the same standards as other forms of money, and if it's a form of payment, it needs to be regulated to similar standards as other forms of payments. And there's a regulatory regime which is being enabled by legislation at the moment. So the point there, in a way, is that you can have a lot of diversity and choice in these forms of money. I think the one thing that we really care about within that, and coming back to original point about the likely need for the pound, that second motivation, you should be able to move between all of those monies very seamlessly. They should be what we refer to as interoperable with each other. So there are low costs, there are no barriers effectively, and that creates the kind of vibrancy. The problem or the risk is that you end up with these different forms of money, but you have significant frictions or costs in moving between them, and that could create, consumer detriment or economic inefficiency.
Very good point. I think my takeaway is that we are looking for a regulated alternative. We're trying to enhance the existing forms of money and make them digital, make them smarter through new technologies that we have, which is programmability, tokenization, smart contracts. So, and then ultimately enable atomic instant settlement to ultimately reduce cost and improve speed of payments.